Right, good afternoon, everyone. Welcome to today's webinar. We're excited to have you with us. It's now noon. And once again, we've really got an engaging session lined up for you today. My name is Neale Petersen, and I'll be your host and moderator today as we dive into a highly relevant topic, which is residential buy-to-let investing in a challenging real estate rental market. So this webinar is proudly brought to you by Real Estate Investor, South Africa's leading independent platform for real estate news, investing, education since 2007. So at REI, we are dedicated to empowering investors, property and business professionals with the best insights, education and updates through our digital platform, rei.co.za, our award-winning monthly magazine, Real Estate Investor, and our regular live webinars and events. And today we're going even further to deliver value to you today. So some quick reminders. If you've registered for today's webinar, we'll send you a link to the recording after the event, and you can also find the recording on our website on our homepage, rei.co.za. We encourage you also to engage and ask questions. For maximum value, submit your questions anytime during the session using the Q&A box at the bottom right-hand side of your screen, and we will address all of your questions towards the end of the webinar. Now, let's get on to today's webinar theme, Smart Investing in Residential Rentals, Strategies for Success. And today we'll explore to take your residential property investments to the next level. So let's get to the core of it, and we'll discuss how you can elevate your residential property investments. So without further delay, I'm excited to introduce our esteemed panel of experts, each of whom will provide valuable insights in today's discussion. First, we have Elize Roux. She's an attorney, managing director of Xpello, a leading property solutions company. And Elize specializes in eviction management, an essential aspect of property investment. Elize, would you like to introduce yourself to the audience, please?
Afternoon, Neale, and thank you very much for having me. We love the industry from Xpello side, and we get involved in a lot of tedious things. So yes, as an attorney, saw a lot of litigation, but focusing on Xpello, we play a vital role, I think, in breach management. Thank you for having me.
It's an absolute pleasure, Elize. Next, we have Jaco Grobbelaar. He's a founder and CEO of Prosperity Enterprises, property investment structuring and education company. And Jaco is also a seasoned property investor, expert in investment structuring, and international speaker and property author. Jaco, over to you. Please introduce yourself.
Good afternoon, Neale. Good afternoon, everyone. I am so excited to be here today and really, really excited for the conversation that we are going to have around success strategies. So Prosperity Enterprises is all about empowering you to build and protect wealth to create financial freedom. So we focus on structuring. We make sure that the correct structures are in place, and also in the journey to help you as a property investor and to educate you through your journey of building your property portfolio. Very excited to be here, Neale. Thank you. Thank you very much for having me.
Absolute pleasure, as always, Jaco. Last but certainly not least, we're joined by David Beattie. He's the founder director of Chorus Letting, a well-regarded rental agency and property management specialist. David is also a property author with deep expertise in the industry. David, would you please introduce yourself to the audience, please?
To be here today, and then also I'm unmuted, and welcome to the delegates. So as you said, I'm author of the Expert Landlord book. I'm also founder and principal of Chorus Property Group. We manage properties across Cape Town and Joburg. We're the only rental management company that uses the Expert Care program, which provides peace of mind to all our property investors that they are achieving their investment goals with their property, which is kind of the aim after all. And it's just my details, but welcome to everyone. And we specialize and we're really passionate about helping property investors through different resourcing to make sure that they can maintain their property investment. It's all good and well buying your investment, but can you maintain it?
Wonderful. Great having you as on the team as well, David. So thank you to our panelists for the introductions. It really is a privilege to have such esteemed experts with us today. So let's dive into our discussion. So Elize, let's start with you. Ladies first. Can you start by briefly explaining your background and what led you to specialize specifically in eviction management and property solutions?
Neale, so I was a litigation attorney for 20 years, of which the last 8 years I specialized in evictions and property-related litigation. And what we realized in 2017, we identified that a lot of investors can't afford to proceed with an eviction. So they try illegal stuff, or they try shortcuts. And that's where we identified the needs and established Xpello to make evictions more available. And I think that was a need that was in the market at that moment. And since 2017, how we've grown, after hearing the needs of many agents and investors, to know that it's not just managing the eviction, but the breach process, to be more proactive. Because you have these amazing agents managing the process, but they can only do the management part. And attorneys, they like litigating, they want to do the legal part. They don't want to now be nice. You get them to go fight. So we sort of entered in the middle to bring that balance. And to lessen some of the load that shouldn't be on an agent's hand. And that's where we came from, and that's what we're focusing on.
Oh, wonderful. Very important part. And it's normally an area which some investors actually don't consider. So I think you're playing certainly a very important role for them. So thank you for that background there, Elize. So Jaco, can you explain the importance of structuring your property investments? Because I think somebody wants to jump into the market, start investing, they get into sort of finding deals and they forget about, the longer term. So do you want to maybe just share, how to structure your property investments correctly and how this can impact long-term success?
Absolutely. Thank you, Neale. And a question that I get very often, or on this question, what I often tell my clients is start with the beginning in mind and ask yourself, where is it that you want to go? What is it that you want to achieve? And once you've determined that, break it up into chewable bite sizes to get there. So it's actually very possible for you to have 10 or 20 or 50 or 100 properties if you want to have that. But in order to do that, you are going to have to approach this property investment thing like running a business. You are going to have to set up a business to run all of this. So I always tell my clients 3 things: own entity, own bank account, and own financial statements. If you want to build a property empire, if you want to invest in property and you want to own multiple properties, it's important that those 3 things are in place, that you've got an entity of its own, that it's got a bank account of its own, and that it's got financials of its own. Because the moment that you have that, you actually set yourself up to be able to scale and to build something bigger than just owning 1 or 2 properties. So if your intention is to build a property portfolio, or even better, a property empire, then you definitely need to have the correct structures in place to achieve that.
Okay, wonderful. I think such an important point, and something I think that all investors who are either starting their journey or even bought a few properties in their own names to relook at that aspect. So David, tell us a little bit about your journey in property management. I know you're also an investor on this side as well, because I mean, in my book, as an investor as well, your property management is probably the most important. It's as we can call it asset management, property management. And I know up front you had all your 5 aspects that you look at. So maybe, and then tell us what makes your Chorus letting, because you obviously let out for a lot of investors too. What makes you stand out in the industry?
Neale, I bought my first property, I think in 99 or 2000, and it was a complete mess up. I got an agent to place a tenant, and I didn't know anything at the time. So the agent ended up being a drug addict, and I don't know, messing up the property. and I managed him. Luckily, he absconded one day, and I got my property back. But yeah, it was and since then I realized that property management is the key thing to keep your, for sustainability. Um, you can look at a property empire, which Jaco, I 100% agree with, but you can only do that if you're building strong systems on your management so that you can look for deals. What we do is the non-sexy stuff. It's the boring stuff in the background, and I can go into it later, but it's the systems and daily routines. Buying a property is much more sexy, going out and looking for deals and negotiating. And what makes us different is that we only do this. And we've got I've got a whole lot of team members who love doing the routine stuff. I had an email this morning that came through as these are the main dates for April. So that's what it entails. You've got your finance guys, you've got your leasing guys, you've got your rental agents, and it's a systematized approach that all the different elements. It's not rocket science. Property management is not rocket science. It's just that most people don't do it that often. And it's just made up of a whole lot of simple steps. But if you miss out one of those simple steps, then you're going to cause problems for yourself. So yeah, I think that's what we do is we focus purely on the investor landlord, and we provide the four main needs. That expert care program I spoke about, the CARE is the four main needs of landlords, which I can go into later.
Okay, wonderful. Because there's so many private property investors that actually run and manage their own portfolios. So I mean, I know it's over 80%. It's a very high number. And so if you're obviously going to take control of managing your own property, you've got to be darn sure you're following process, as you say, and it's such an important part. Yeah. So thanks for sharing us, and I know you're going to elaborate a little bit further on that a little bit later. So, Elize, I want to come back to you. As they say, prevention is always better than cure, because we don't want to come in after there's major damage and that kind of thing. So what are the most common causes of tenant disputes that lead to evictions? And it's not a nice topic, and we've heard how expensive it is, and in terms of this, and we want to avoid this situation. So how can landlords prevent these issues from escalating?
So, Neale, I think the first thing is all investors must please know that I know evictions and tenant breach is like the stepchild. Nobody wants to talk about it. But I think we're in an era where we have to be more proactive and talk about it. And because if you are prepared and it happens, then it's not such a big surprise. So for the first part is to try and prevent it. Is your pre-screenings are super important. Like David says, is you have to have a team that knows what they are doing. A lot of people think pre-screening is only for, you get a credit report. And everybody can get a credit report. But what you do with it is so vital. So we usually advise many of our owners to rather, if you're not sure how to do it yourself, because it's more than just a credit report, please go to an agent. Xpello doesn't do pre-screenings. We've got our vetting process when we consider an application, but take that active approach. Rather spend the money if you don't have the knowledge. I mean, I have my property and I appointed an agent to get me a tenant, and I paid them to do the vetting because that's their knowledge, their expertise. So first proactive point, definitely do pre-screenings and do it fully and completely.
Okay, wonderful. I think good advice, and for everybody listening here today, it's Elize, attorney speaking. She's a specialist in this area. No, thank you for that, Elize. Wonderful.
Jaco? Sorry, can I?
Yeah, please. Of course you can. Yes.
I must admit, the amount of discussions that our team is having with the landlords on tenant vetting, it's and I just want to put that in. It's not a question of you look at a document and you approve it, because the average tenant out there is struggling financially and the credit record is not that great. And so you actually have to work the application. And I'm amazed every time I get these copied in with emails constantly about the backing and forth with the landlord. Can we approve this owner? What about this question? What about that? And what about, so just bear in mind, I just want to say from a practical perspective, we experience what Elize is saying.
No, wonderful. I think thanks for adding value to that. Jaco, I want to come back to the structures, because obviously, part of the whole structuring process is that obviously the landlords want to protect themselves. and in the event of defaults, etc., and and eventually where it gets so bad that maybe the bank's got to come after you from a legal perspective. So when it comes to investing in property, many investors are not sure, what is the structure, what is the best structure that what I must use? Is it trusts? Is it companies, or are there other legal structures? And, what are the factors that they should consider when they're choosing the right structures?
There's 4 pillars for me when it comes to structuring. And that is number 1, asset protection. Number 2, estate planning. Number 3, financing capability. And number 4, tax efficiency. So first and foremost, you want to protect what you've built. We've all heard it's easy to make money. It's more difficult to keep money. So you want to make sure that you have the right structures in place to protect your assets so that if things ever go wrong in one of your properties or in one of your portfolios, that it's actually ring-fenced and protected. Number 2, you don't want all your money to go to government one day when you die. I always joke and say dying is very expensive, avoid it at all costs. But it's really expensive to die. So you want to make sure that one day when you pass away, that a third of your estate doesn't go to government, but rather to the people or the organizations that you want it to go to. And the only way to do that is through using trusts. And then thirdly, one that a lot of people miss is financing capability. You want to make sure that you can get financing multiple times over to build a portfolio. Otherwise, you're going to get stuck with 1 or 2 or 3 properties. That's where most of my clients are when we sit with them the first time. So to have financing capability, the ability to get financing for more properties, you can't buy property in your own name. And then number 4 is tax efficiency. You want to make sure that you pay the least amount of tax legally as possible. And by taking in consideration all 4 of those pillars, the asset protection component, the estate planning component, the financing capability component, and the tax efficiency component, we've determined that the best structure for a person to have is to buy your properties in a company, that's a P2I Ltd, but that the shares of those companies aren't held in your own name, but that they are held in a holdings trust. So you have a trust holding the shares in the company, and you've got the company buying the property. For me, that is the best structure to have in place when you want to build a property portfolio.
Excellent. I think those are such important points there, Jaco. Thank you for sharing that. Really, really important, I think, in the bigger scheme of things of investing. David, coming back to you, property management does involve a lot of moving parts, as you kind of shared already. I mean, what do you see as the most crucial factors in managing rental properties effectively?
If I may just bring up this slide again, and let's focus on the middle one. We use what you call the expert care program, and that's the 4 main needs of landlords. Every landlord has the same need. I was with a client who's got 200 and whatever, just under 300 units this week, and their needs and what we were doing in reporting back to them were the same as I would say if you've got one flat on the side of your house which you're renting out. It's first of all, it's a CARE for cash flow, and then it's asset, which is a condition of your unit. It's reconcile, which is just a broad word for the administration and reporting, and the E is just excellence for peace of mind. If you don't have peace of mind, you're going to sell your portfolio. So the A is for cash flows. The 4 risks you've got to look out for is with regard first for the cash flow. And that's basically your collections and your occupancy. Collections and occupancy. So when you're thinking about what is the aim of your property management and your long-term success of your portfolio, so that you could build your empire, is you're first going to look at your cash flow, and your levers are your occupancy and collections. If I can just add a third one in, is utilities management. That is increasingly a big risk in the marketplace nowadays. The next need is your condition of your property. If your property is deteriorating over time, which it does, it's just wear and tear, you've got to be looking after that condition, because part of your investment strategy is to your investment return is the asset value that goes up with inflation or property prices. And if your investment's deteriorating, you're losing that. So you've got to look at your condition of your property, which is done by strong tenant or strong inspections, in and outgoing inspections, midterm inspections, and also just knowing your property proactively, the maintenance around the proactive side of it. And then your third need is to make sure that your administration and your systems are up to date, that you're up to date with your levy statements, that you're up to date with your municipal accounts, that you're getting the right information together so that you can report your SARS every year. And then lastly, all of those first three things is what's going to give you peace of mind. Because I don't know, I'm a simple guy that I just want to know, is everything under control? And if you do those first three things I've spoken about, you'll have peace of mind. If you've got peace of mind, you've now got the capacity to build your portfolio further.
Okay, nice pillars over there. And I think, Elize, if I bring you here into this conversation, because, and I'm sure David will agree with this as well. Certainly in your experience, I mean, if we look at rental agreements, and I think it's such an important thing, which I'm sure people like David would obviously liaise with yourself. And how can landlords ensure that their rental agreements are watertight? I think this is very important because I think clauses in any contract are so important, which a lot of people overlook. They just sort of, oh, no, and they tend to use the standard sort of rental agreement without taking any consideration. And I think that's when you come in. So maybe you can tell us, what are the things that we should have in our rental agreements to ensure that they're watertight, to avoid costly eviction procedures down the line? Because as you say, prevention is better than cure.
So, Neale, I want to almost say definitely not Google. So please don't go find, in the old days, everybody went to CNA. And I think I've seen, and it's scary that people Google a lease agreement and then they go put a lot of things in, and people think just purely because you put something in an agreement and the party signed to it, it's enforceable. It's not. So my first advice is always the source. Please go see where you find this lease agreement. Go to a reputable rental agency. They spend a lot of time and they have attorneys really reviewing their lease agreements. And ask your agency. I mean, like David, I mean, he's got the expertise, but he also has a team, that deals with it to make sure his lease agreement is on par. Or if you buy it from a system like TPN, I mean, that's a reputable company. They deal with lease agreements and rentals. So make sure your source is correct and go do your homework, make sure it's got everything. And please be careful when you start modifying, because yes, your agent might have a lot of experience in the field, that does play a role, but it still needs to be legal. You can't put there that I'm allowed to cut the door open if he doesn't pay the rent. You might want that, but you can't put it in there. And we see strange things. So it's enforceable, make sure your source is correct, and then that it's properly completed. That's the biggest thing I see, these agreements not being properly completed and signed. That can prevent a lot of headache in litigation later on.
Yeah, don't switch off the electricity as well.
Don't move in with them, Neale. Don't move in with them.
Absolutely. Okay, no, thanks for sharing that, Elize. So Jaco, let's look at some of the common mistakes where investors make when choosing these various investment structures, and how can they avoid these pitfalls?
I sit with clients on a daily basis that have structured their portfolios wrong. That's actually why we as a company exist. So if you are in those shoes, that's all right. There's always a way out. You can sit with us and we can help you to get your structure right. But one of the most common mistakes that the property investors make is to say, I'll sort out my structures later. And they start building their property portfolio. And then they get to a place, usually about 2 or 3 properties. If you earn a big salary, maybe a bit more, but where you can't get more financing, or where you've lost a job and suddenly there's credits behind you, or where there's an unfortunate death and there's a lot of cost and there's an estate. I mean, a deceased estate now takes about 2-3 years on average to sort out. So a lot of people say, I'll do it later. And then that's a very, very big mistake. I always tell my people, I always tell the people that I sit with, property investors, get your foundation right first. Put the correct structures in place and then start building on those structures. The other mistake that people make is they try and save money, and we all try and save money. And that is because they've got the assumption that structuring is extremely expensive, and it doesn't have to be. Doing structuring with us is actually very, very affordable, and it's a necessary expense for you to build a property portfolio. But a lot of people try are what they call penny wise and pound foolish. They're trying to save a couple of pennies now, and because of that, it costs them a lot more money later to sort out and to restructure. When you look at restructuring a property portfolio of 3, 4, 5 properties, it can easily cost you a couple of R100,000 to restructure, which is much more than just setting up the correct structures in the beginning and starting your portfolio from day one with the right structure.
Excellent. Great. Thanks for sharing that, Jaco. David, coming back to the whole sort of property management issue in terms of effective property management, as I mentioned earlier, there's a lot of private investors managing their own properties. I know you also manage a lot of portfolios as well on behalf of a lot of investors as well. But how does effective property management play a role in reducing risks associated with rental? I know you touched on some. Can you share some risk management tips for property owners, for landlords?
Sure, Neale. I must admit it's quite a privilege listening to Jaco and Elize, being in the marketplace and dealing with lots of different kind of landlords. These guys are just saying the truth. I can see it worked out in practical application. I just want to say it's not just words. I'm seeing it in actual practical applications, and our larger landlords have done what Jaco have said. So I just want to encourage everyone to really listen well. Anyway, the risk management, as I said, is around the first thing you want to do is look at your income risk, and that comes with tenant screening. Getting the foundation right, tenant screening, and then also on your income, you just want to make sure that you're doing your billings every month, that you've got a strong debt collection procedure in what you're doing. And by the way, my number will be up at the end. If you just want to spend 5 minutes on the phone with me on a particular procedure, I'm quite happy to give that to you. And what we do every month. So on the first you do something, on the second you do something, on the third. And then also on the income, you want to make sure 2 months before the end of your lease agreement that you're checking whether your tenant's staying on or not. You say, well, I want to do private management, which I actually support. If you're a first-time landowner, I would recommend you probably do your own management so you can learn and know how to keep your rental agent accountable when you do build your portfolio. But what folks say, I don't want to spend money on a rental agent, but then 2 days before the end of the lease agreement, they realize the tenant is moving out, and so they lose a whole month's income. Whereas a rental agent obviously would anticipate that. And then you just want to, just one other point is the condition of your property. What I'm seeing over and over is that 1 year, when you're younger, 1 year ago is a long time. When you're a little bit older, like Neale, not you, but me, is that 10 years goes by quickly and the property does deteriorate. So I'm just encouraging landlords to really put money aside for maintenance. I know it's painful, but maintenance does happen. So yeah, I mean, there's many those are kind of risks, and just lastly on the tenant communication. Tenants are not your hassle. Tenant is your client. So I'm not saying over service your client. You don't have to give them Mount Nelson hotel quality of service, but being reactionary to your tenants, being ahead of the game, making sure there's strong expectations between you and your tenant. This is where the lease agreement comes in. Is really important. That will help minimize your risk, both on an income perspective. A happy tenant is going to be a better performer for you, and they also have less chance of stuffing up your property. So yeah, those are some risks.
Wonderful. I think there's some really good advice. There's some real golden nuggets that's come from David there. Thank you for that. And I already see that people are saying recording. Yes, you will get a recording either on the rei.co.za website, or you can also get it if you have registered. So we will send it to you automatically. But I encourage our audience. I mean, we've got almost 70 people here live. So let's fire away those questions. We got the experts in the room, which we'll deal with at the end. So Elize, coming back to you, if we start looking at eviction laws, and it's a very unfortunate situation that at some stage, if the landlord is not getting his rent, that we're going to have to look at that. And we know it can be complex. And it also varies across different provinces and regions and areas, etc. But what are the key legal considerations every landlord must keep in mind when managing rental properties from the eviction perspective?
Neale, I have to say, when David is speaking, I can hear his expertise just popping out. And even what Jaco said of people saving money. And that's what I've seen even when we get to evictions. So I think a lot of times the first thing is a landlord should really keep his house clean. Not to do anything that can prejudice any future legal action. That's the first thing. The second thing is you should really try not to delay the process. Very often, they delay the process either because they're thinking they're being nice or purely because they don't know what is the next steps. And unfortunately, I can say we're going to get you a quick eviction, and my quick eviction in my mind is 4 months. If I tell a landlord you're going to be without rent and you're going to have this person staying in your property for 4 months, that's not quick. So, that concept is also different. So from my side is from a landlord or any person that has a property, again, have a plan in place and deal with the correct people. There's amazing attorneys out there. I mean, Xpello's got 27 panel attorneys nationwide. And the reason why we have is exactly what you said is, in Cape Town, they deal with evictions a bit differently, sometimes like in Gauteng. Their approach is a bit differently. And you need attorneys on the ground in court that knows what's going on, not just people that standing and speaking, advertising. Also, people get confused between litigators and conveyancers. You have to have a conveyancer is a fantastic person. I have a lot of respect for them. I'm not a conveyancer. But, when you speak to your attorney, ask them if they do litigation. Conveyancers don't want to get involved in litigation. So be wise, get the correct attorney. And if you have to Google an attorney, please don't go for the cheapest attorney. Go for the one that knows what they're doing, because eviction has a specialized process. I mean, the FI Act has been set out for the process. So you want somebody that knows the process and how to do it as quick as possible. And Neale, if there's somebody that's currently in that position and they don't know where to find an attorney, please go to the Xpello website. All our panel attorneys are listed there, or we can do a referral for you. At least the attorney has been vetted and they are capable of doing eviction.
Once again, I think good advice. Get a specialist. You've got to be a specialist in the area, specialist litigator, specialist conveyancer. I think really good advice as well, Elize, because people just say, I'm an attorney, and they do many different things. They do commercial law. They're doing any kind of law. And in addition, I also do litigation, plus I do conveyancing. Probably not the best thing. You need focus. So I think certainly as an investor, so certainly good advice. I think it's very important. And that's why we find a lot of landlords are not successful. So I think we've got a masterclass in steroids here, people. So really some good advice here coming through. And once again, to the audience, please fire away with your questions. Don't be shy. There's no such thing as a stupid question. Okay, bringing you back into the discussion here, Jaco. Let's talk about property education, because this is so important, because this really is what we're doing now. We're educating people who are either starting out as an investor, who are ready and probably not so successful, making mistakes, which is part of the journey that we actually have. So what do you see as the key advantages of property education? And I know you've got an event coming up also next Thursday in Durban, and you do it also around the country for investors. And especially when it comes to legal structures, because obviously that's one of your areas of expertise and also their implications. So maybe if you can share that with the audience.
One thing that I want to say, Neale, is that making money is not easy. And let's be honest about that. If it was easy to make money, everybody would be rich. So, I mean, let's be honest. You are investing in property because you want to make money, right? Yes, you might enjoy it and you might have a passion for property, but at the end of the day, you want to make money and you want to do that for certain reasons. Maybe you want to spend more time with your family. Maybe you want to quit your job one day. Maybe you want to be more flexible and you want to have some form of a passive income. So whatever the reason is, you want to make money out of property. And if you want to make money, you're going to have to make the most important investment that you can make, and that is an investment into yourself. You are going to have to educate yourself. I see a lot of property investors out there that is losing money. They're not making money. They are losing money investing in property. And the reason for that is they are not educated. So if you want to invest in property, make sure that you educate yourself. Read books, attend seminars, attend webinars like the one that you are doing today. I'm preaching to the converted, but invest in yourself, educate yourself, make sure that you learn as much as possible. I've been investing in property now 15 years and I still learn every single day. And you can learn from your own mistakes. Those are good lessons to learn, but they're sometimes hard lessons to learn. There's more affordable ways to learn, and that is by learning from other people's mistakes. And you can listen to us that have made a lot of mistakes and avoid making those mistakes yourself. So um, a book that I really want to recommend for you to read is David's book, Expert Landlord. It's one of the best books that I've read on property management, especially if you are going to manage the property yourself. So I'm sure David is going to talk about that a bit later, or towards the end of the webinar. That's a great book to learn about how to manage your property. If you want to learn more about the structuring side of things and the investment side of things and how to find the right investment properties, then I would recommend my book, Prosperity Through Property. But educate yourself, learn, read, differentiate yourself, because it's by doing that that you are going to reach that goal of creating financial freedom through investing in property.
I always say the best asset is yourself. So if you invest in yourself, at the end of the day, education is such an important thing as
Absolutely.
an investor. So thank you for
Absolutely.
that, Jaco. So David, yeah, talking about mistakes and all that kind of thing, because we're not perfect. We do make mistakes, as much as we try to prevent them coming along. And I know you've shared some of them. You also gave everybody, you said, give me the 5-minute call. So I'm going to tell everybody, phone David for the 5-minute call to get some little golden nuggets, but he's going to share some now anyway. But I just maybe share some of the common mistakes landlords make when it comes to managing tenants. I know you've touched on some already, and how can they improve their approach to avoid these issues?
Yeah, I mean, I think the first thing with tenants is communication. Now, tenants can take advantage of communication, but if you set up the rules of the game and say it must be in writing, I will respond in writing during business hours or something like that, and there's not that many crises that happens after hours. I mean, it's going to happen every now and again, but it's not the norm. And I think clear expectations and communication, especially around communication, is important. One of my landlords, for example, many years ago in Johannesburg, he had a number of properties and he was a very, very busy doctor, but he insisted on doing his own maintenance. So what happened is we had a whole lot of tenant churn because the maintenance it's not that he couldn't do the maintenance, it's just he never got round to it. And then he didn't do it properly. And so he saved 500 Rand or 1,000 Rand to change the gate motor or but then tenants who were after 2 or 3 months were getting very frustrated. So the turnover on that portfolio was much higher than it normally did. So his insistence of saving 1,000 Rand a month meant that his tenant turnover was much higher, which he was losing money on the back end. So that's kind of, for example, so think value, don't just only think money. Don't only think cost, which is important. You've got to watch your costs. One of my landlords, and it's interesting talking to the big corporate landlords because they look at your cost of operations and so forth. And there is a kind of a drive to get it down to 30, your ops cost to 30% of your income. It's not always possible in a smaller portfolio, perhaps, but so you have to be very aware of your cost, but look at value. Jaco is a great example, as I've worked with Jaco a lot in the past. And Jaco says, I'll go into a new property, I'll make it up to spec. He spends a few grand on it, but then you've got a great property, which you've got walls that, for example, landlords say, I need the cheapest paint. But then you have to paint it every tenancy. You can't wipe the walls. So those kind of things are mistakes I'm seeing. I had an agent calling me the other day on something. It was about utilities. So they said, well, no, they said verbally that the water is going to be included in the rent. At the end of the tenancy, there was a 16,000 Rand bill on that water meter. And so now the landlord goes back to the agent and says, but hang on, that's, because the landlord had also agreed to it. So the first thing I said to the agent, what does the lease agreement say? Oh, she have to check. So she checked, and obviously the lease agreement says that all water and utilities is up to the land. I mean, it's a tenant's cost, and so they managed to negotiate to 8,000 rand because they had verbally stated to the tenant. So it was just a complete mess up. There was what the lease agreement said and what the agent was saying, what the landlord was saying, and those are the kind of mistakes I'm seeing, and that's the kind of phone call I get to say, okay, how do we unravel this thing? Anyway,
Absolutely. But you know what? It's such an important point that you brought up there, David, because the maintenance issues of a lot of investors, that's why they want to do it. Well, that's why they don't want to do it themselves. Eventually they realize they get the 12 o'clock call that says, my toilet doesn't flush. Would you come and fix it, please?
But the question, Neale, the question we've got is, whose fault is that? Because an inexperienced landlord's going to say, but I'm going to carry that cost. But a more experienced landlord or agent will say, but hang on, that's a tenant cost. So it's not only getting the maintenance done, but who covers that cost? And a good inspection and a fair inspection, ingoing inspection, and a fair outgoing inspection will then determine whether it's a tenant cost or land cost on damages. Now, some landlords go way too, they blame the tenant for everything, but in some land, which I believe is unfair, and if that's the way you're going to run your business, I know in the long term you're going to suffer. Rather be fair and carry some cost, which is your own landlord cost, and then in the long term you're going to have a great, fair, sustainable business. And in some landlords, I'm saying, but you're losing out. You're not holding the tenant accountable.
Yeah, no, absolutely. And it just is such an important aspect that I think private landlords that obviously manage their property themselves, they tend to forget the maintenance issue. I mean, there's so many tenants that we've seen disputes, and I'm sure Elize will actually agree to that say, I won't pay my rent because, there's maintenance that hasn't been done, and that's not a reason. So that brings you in, Elize. So, when it does come to optimizing rental collections, what are the systems that you recommend to ensure that payments are received consistently on time? And because he says, you haven't fixed my toilet, you haven't done the painting, you haven't done this or this or that. What are those systems?
Neale, I actually want to start off by just saying what we've seen in evictions. The two main reasons why tenants breach their lease agreement is, of course, non-payment, but firstly, it's not affordability because screening wasn't done properly, or even on renewal, people didn't see if the tenant can afford the increased rental. So that's where we see is a breach and causing evictions. The second one, as you said, is maintenance. We're seeing an increase in evictions that's getting to that point where tenants are refusing to pay because the maintenance is not done. And we struggle. I mean, we can't go to court with dirty hands and say, oh, this tenant doesn't want to pay the rent, but, oh, by the way, the whole property is covered in mold because the landlord is refusing to do what he's supposed to do. And as David correctly said, whose fault is it? But there is an obligation. The system to have the collections properly, I say, from our side, because I'm not that involved in that David's cup of tea, but what we've seen is to be proactive. So landlord, if you want to manage your own property, please get the education, as Jaco said, but not just on to get the property, but to manage it. You need to look at the Rental Housing Act. A lot of investors think to manage a property means to send an invoice. And that is if they send it, because a lot of people don't even send invoices. So if you don't have the money to get the proper systems, and for me, for example, the time, like the doctor, for me to go and do everything that an agent has to do now, it's just too time consuming. It's going to cost me more money than actually just paying for me to manage the property. So invest in something, do your homework, know your acts, and then you will be able to have a better collection process and communication. I think, Neale, communication is so important. Like David said, you need to be able to speak to your tenant and manage expectations. But I see people not doing anything. I had an owner saying, I asked him, listen, can you send me the rental statement because the tenant is now in breach? He says, but I don't have one. I said, why not? You need to send it every month. He says, But the tenant knows how much he has to pay me. Why do I have to remind him every month? And like, because that's the
It's such an obvious mistake, but this is what leads to obviously non-payment and collection issues and that kind of thing. So yeah, very good point, and I think very valuable for the audience here. So thank you very much for sharing that, Elize. So Jaco, if we look at let's look at compliance. How property investors can navigate the complexities of changing legislation, and also to ensure they remain compliant while maximizing, because compliance is quite a big thing now. From a number of aspects, as an investor, the tenant, everything. There's a process that has to be followed. So how can investors navigate these complexities of changing legislation?
I think it's critically important to have the right team around you. It's impossible to know everything about everything. So, for example, Elize is somebody that I want in my team. I want to be able to go to someone and say, what does the PI Act say? What does that Rental Housing Act say? What are the ways that we can approach this breach? So having the right people on your team, that is critically important. Again, I think one of the biggest swear words for me in property investment is DIY, doing it yourself. And like I say, people like to save money, but often people are penny wise and pound foolish. I've got very, very good attorneys and lawyers in my team, in various different aspects, with commercial contracts, with evictions, with litigation, whatever the case is, so that if an issue arises, I actually have an expert that can take care of it. So have the right people in your team. But also, yes, educate yourself. Stay up to date with there's a couple, maybe Elize can elaborate a little bit on that, but I think there's 1 or 2 or 3 acts that you should at least know the basics about, and that you can read, or you can even ask ChatGPT to give you a summary of that act, and just educate yourself a little bit about that. But again, be careful to do things yourself. If you don't know how to do it yourself, rather use an expert. If you don't know how to manage property yourself, or you don't know what the legal implications are, a very simple one is, if you don't have an entry inspection, you can't withhold any part of the deposit for damages that the tenant has done. That's a very simple law, but if you don't know that, you're going to get to the end of the contract and there's going to be obvious damages that the tenant's made. But because you didn't do an entry inspection, you're going to miss out on that money that you can withhold from the deposit. If you use somebody that knows what they are doing, they would have conducted an entry inspection when somebody moves in. So those are yes, have a basic knowledge of the legal side of things, but have the right people on your team and make use of them.
Okay, great. I think also very good advice. It's definitely not a solo game. You've got to build a good team around you. Real estate investment is a team sport. It absolutely is. So thank you for that. Right. So David, how do you recommend landlords handle tenant screening? And what steps can they take to ensure that they are selecting the right tenants, so that they don't land up with Elize starting to evict everybody?
So it begs the question, is what is a good tenant? So a good tenant, in my view, has got 3 main elements. Number 1 is they pay well. Number 2 is they look after your property. And number 3 is that they behave well. So number 1 is they pay well. Paying well is paying in full, which is everything you've invoiced, which is in it could be it's obviously your rent plus anything else like utilities or security or whatever. So are they paying in full, and they're paying on time, and then they're paying every month? So that's a good paying tenant. Those 3, paying in full every 3 months is not a good paying tenant. And I often get landlords saying to me, "Oh, so like I've got a great tenant, but they pay a bit late." Well, he might be a great person, but he's not a great tenant. So so those are the 3. So you're going to do screening elements, which is going to cover those 3 risks. So you're going to look at they must fill out the application form in full, and if it's not done in full, you must send it back until it's done in full. And then from that information, you're going to do your TPN credit check, which is going to give you your credit rating and credit suitability. You're going to look at bank statements to see that money is going in and coming out, and that the rent payment's been done. And you're going to check salary slips. Bear in mind, 1 out of 4 applications have got fraudulent documents, so please be very careful. And those fraudulent documents are getting more and more, it's obviously becoming more and more easy to do. And quite frankly, I don't blame tenants for doing that. Many tenants are desperate, so they're going to do what they can do. So but don't go into tenant screening with, unfortunately, I'm not the best person to do tenant screening because I think the best of everyone. And you don't do that when you're doing tenant screening. So you've got to have a good sense of cynicism. And then you're going to do tenant references, which is going to show you behavior. And that you're going to do not only the existing landlord, but prior landlords as well. So if you're doing, so you're checking your documentation for income, and then you're doing your tenant references for behavior.
And they say bank accounts don't lie.
Well, no, they don't lie, but fraudulent documents, fraudulent bank statements do. So just check out that they're not fraudulent.
Good point. And I think that's such an important point, that people get bamboozled if you don't have the right people on your team. And I think you could probably spot that a mile away, David.
Well, I mean, that's what I was going to say. On instinct, back your instinct, because sometimes you're just not going to have a great feeling about someone. So you can't do your tenant screening on feeling, but you can't only do your tenant screening on facts and figures. It is a combination between the two. And if you don't get a good feeling, don't go for it. It's not worth it.
Yeah, great. So guys, there we go. Very, very, very good advice there from David. I think very important, that instinctive kind of feel over there, but work with the professionals. Yeah, you've got professionals here that can assist you. All right, let's deal with some of the questions here. And we got some really good questions. First of all, from Ronaldo. What's the best way to inform tenants about a rent increase if you haven't increased rent for 2 years? Now, I would assume, David, that falls directly into your ambit. And I don't know whether, Elize, you want to add to that, other than to say sending an invoice is not the only thing, or not sending an...
So this is where landlords leave money on the table. And one of the discussions we have in our business is where you're leaving money on the table. And this is one of the things about having a routine. It's a great pity that you lost a year's increase amount, which you can't really claw that money back. So just have a routine. But by the way, that question in Joburg, for example, you may not have had an increase. You may not have lost anything. Up to 18 months ago, 2 years ago, you couldn't have that conversation anywhere in the country. In fact, your rent was reducing in some respects around COVID time. But the best thing, the way to increase it is by looking at the lease agreement. What does your lease agreement say? So if your lease agreement doesn't speak to increases, well, then it's pure negotiation. If the rent speaks to an increase, well, then you can refer back to that, and at least you can do the increase for the next 12 months. If you can try and negotiate for the last 12 months, but if it's a good paying tenant, then I would not over negotiate that. I would rather take the income going forward and make sure that increase is done. So your lease agreement is going to help you with negotiation. The second thing is, do a market research as to what if that tenant were to vacate, what would you market that property for? And try and get as close to that figure as possible, because that's ultimately what your rent should be. If it's over and above that, well, that's a bonus, but it's a slightly risky because that tenant's not stupid. They may look elsewhere. And then if it's under, of course, you're leaving money on the table.
Yeah, wonderful. I think a great response there. Okay,
Neale,
next question.
may I just add something quickly? And that's also where it becomes very important, because a lot of landlords forget that the legislation, the CPI, determines when these things should be mentioned. So the lease agreement, everybody thinks you have the conversation a month before the termination date. You should actually have this not more than 80 business days, not less than 40 business days before that. And a lot of people don't know this, and they leave it too late. So again, Jaco mentioned it. Look at Section 14 of the Consumer Protection Act. That's the section that's super important that you have to know if you're managing your own property, and the Rental Housing Act. So renewal, deal with it, at least have the discussion, because if they don't agree to it, then they're not going to renew. And you don't get a tenant just leaving on you. So that was very important from our side.
No, wonderful. Thanks for that.
Just Neale, very quickly, to get the Renter Housing Act, by the way, it sounds fancy, but it's a 3-page document. The key thing is really, and then the regulations that go with it. If you go to the expertlandlord.com and you go under the legislation tab, the expertlandlord.com legislation, I put all the links there for the legislation. They're not, I get bored after 2 pages, so you won't get bored. It's very simple language. Look at the Rental Housing Act, I think 50 of XYZ, and then the regulations, and that'll give you really good information as to your basic rights and obligations.
Wonderful. Good advice there. Okay, questions are rolling in, guys. So we got to get through a few over here. Jocelyn Taylor says, and I think this one's for you, Jaco. It says, if you own 2 properties in a PTY with some shareholders in the PTY, how could you create a trust holding the shares of the company?
There's multiple ways that a person can change the structuring so that a holdings trust owns all of the shares, or at least as a compromise some of the shares. That is where I would sit with you in a one-on-one consultation, Jocelyn, and where we would actually look at the value of the properties, the amount of capital gains that have incurred since the properties have been acquired, whether the properties are over the threshold, which is now after the new budget speech, probably going to be on the ±1.2 million rand. So all of those things we take into consideration, and then we look at the best way to restructure your property portfolio. So also for all of you that are there, I mean, we spoke about the structuring today. If your structuring is wrong, don't fret. It can be rectified. Set up a consultation with me. Let's look at your portfolio. Let's look at where you are at, and let's look at the best way to restructure the property portfolio for you.
Okay, wonderful. I think that's always the best. It is a very personalized kind of service that we do need to do if you're going to look at that specific thing. Question from Anonymous. Is there any accounting or other software you suggest for landlords to use and manage a small 10 or 20 property portfolio? Well, I could give you an answer, Anonymous, and it's a true story. Most private property investors and even larger property investors use one tool, and it's an incredibly high-end tool, and it's called Excel. And believe it or not, it's still an incredible amount of people that use it. That's your first port of call. The rest, I'm going to actually ask David, and if Elize also wants to add to that, there are obviously lots and lots of software products, and I think Jaco even has it, but I just wanted to just add that in.
So, I mean, the simple question is, and I don't have any affiliation with any of these companies. The ones out there is TPN, that's free. It's got limitations. A second one is PayProp. It's fairly expensive, but it's worth every cent. And then you've got We Connect You, and you've got REOS, REOS, all good softwares. If I had to pin and I've got no affiliations. In fact, a friend of mine started REOS, but if I had to pin my flag to a mask, it would be PayProp. Just go for that.
Okay, wonderful. Okay, thanks for that.
If I can
Yes.
quickly jump in here, we actually use PayProp for our portfolio, and we are extremely happy with them. In fact, Neale, I'm going to go against you on this one. Please do not use Excel. There's such amazing software out there that automates a lot of the things for you. So great software that you can use, and I think David covered the majority of them.
Not to go too complicated, you've got the tenant side, you've got the landlord side of the accounts. I'm not going to say more than that. It's more complicated than you think. So use PayProp.
No, absolutely. Look, I think there's for everybody starting out, Excel is the starting point, not to say that that's the one. And if your portfolio grows, you have to. And if you want to be a serious property professional, is to use a proper software. So check them all out. I think that's really good advice. You've given some good ideas on that. Question from Lucky. He says, in a complex, does the tenant pay for levies and rates and taxes? I think that's for you, David.
So typically the landlord would pay for that. But there again, what does the lease agreement say? You can try. So there's what the lease agreement says, and legally you can ask for. And then what is typically done? Typically the landlord covers the rent, the levies and the rates. But just check on your levy statement that it doesn't include things like utilities and security or those little. So look at your breakdown of your levies, but the main levy section would be typically paid for by the landlord.
No, absolutely. I think in commercial can be a lot different if you start looking at commercial property, but residential, certainly that is the case. Marina Vallanos says, what is considered a good rental return yield? And I think that's for you, Jaco.
Yes, absolutely. So a rental yield, so you've got two components when it comes to return. You've got your capital appreciation and you've got your rental yield. Now, often one comes at the cost of the other one. Ideally, you want to have both to be high, but in some areas, like for example, Cape Town in your affluent suburbs, you have very good capital appreciation, but you've got much lower rental yield. Now, your rental yield, for those of you that don't know, that's your annual rent as a percentage of the market value, or the market value of the property. Whereas, for example, Johannesburg has got significantly higher yield than other cities. So all of that plays a role, but the national average is about 10%. So if you can beat that, that's ideal. A lot of people speak about the 1% rule. I'm sure you've heard of the 1% rule. That's where your rent is 1% of your purchase price or your market value of the property. So in other words, if you buy a property for R1 million, you get 10,000 Rand rent. Now, 1% a month is obviously 12% a year. So that's a 12% rental yield. On our own properties, our rental yield is between 20 and 24%. But we've gotten creative with multi-lets and with different ways of letting our properties out. So I would never again accept a 12 or even a 15% rental yield. So it's got very much to do with where you are at and what kind of rental yield you want to earn. It is actually possible to earn a rental yield of more than 20%, just by the way. So don't let people tell you it's not possible. It is possible, but you are going to have to look at one of your alternative strategies. Now, your alternative strategies are things like student accommodation, short-term letting, multi-lets, going into the more affordable areas and the less affluent areas. But it is possible to drastically increase your rental yield. Excellent.
Okay, we've got two more questions before we close, and I'll ask our team of panelists to just give their final wrap to the audience. So then we've got Natalie Chung, who says, is there any specific housing laws with regards to subletting and short-term rentals? I think that's a question for you, Elize. Do you want to come in here?
Yes, Neale. So they have to remember that a lease agreement is a lease agreement, whether you're the main tenant or the subtenant. You're going to be governed by the Rental Housing Act and the Consumer Protection Act. The biggest thing is for subletting, please make sure that they are allowed to sublet. A lot of leases prevent subletting, so it's illegal. So make sure that if you ever lease a property with the intention of subleasing it, that it's clearly defined in your lease agreement. And then for short-term rentals, I mean, that is not governed by the PI Act. It's a straightforward, it's a business, same as a hotel. So just make sure your agreements are is well drafted to cover and protect you properly.
Okay, good. I think that's good advice. Just with regards to the short-term rentals, I just want to add a comment here. In the Western Cape, because we have such a high volume of Airbnb properties, it's under serious consideration by local government to actually increase the levies for residential properties because, to become competitive against your normal hospitalities, your hotels who are paying higher commercial levies. So that is certainly under the microscope at the moment. And so what it does mean is that your short-term rental housing laws could change. Specifically in the Western Cape, we know that it's under review at the moment. So I just thought I'll just add that little piece in there. Then our last question, it's from Eugene, and I think it's for you, David. What is an acceptable commission to rental agents? Is it normally 10% plus VAT, that is 11.75%? Can this be negotiated? And if so, how?
Everything negotiated. You give me 100 units to manage, I'll negotiate with you. But but seriously, look at value. It's two things I want to say. Look at value that you're getting. So if you're paying 10% versus 9%, but your agent is giving you 1 month extra occupation, that 10% is going to be cheaper than your 9% if you look at your net cash flow for the year. So that's super important. Second thing, look at your rand value of your rental. 10% on 3,000 Rand versus 10% on a 15,000 Rand rental for almost the same activity for the rental agent so you're going to be more negotiable on your rent if your rent value is much higher. I'm not going to negotiate a building in Jeppstown with 3,000 Rand units. I'm going to go up to 12%. So that is a factor. My finance manager keeps saying to me, shouldn't get out of bed for less than 500 Rand a month per unit that you manage. So do the maths. It's about the rand amount as opposed to the percentage. So I'm just saying, be careful. As a rental agent, I'm looking at my rand value more than the percentage. So that's really important. And then what are you getting for that rand value? So make sure you're getting value for that.
Yeah, I see there's a few more questions that are sneaked in.
There's one other question. This is really important. Many agents are charging a placement fee and a management fee. Add the two together. And so you're going to say, oh, this agent only charges 8%, but they charge 6% placement fee, or they charge 8% placement fee. And so it's actually 16, 15, 16%. Really critical that you're comparing apples with apples.
Okay, I think that's a very important point there. You've got, that's details that a lot of private investors actually they don't even see it. It's just kind of something. And when they sign up and they look at their net rental that actually arrives at the end of the month, oh, no, but it's already specified in the contract. I never saw that. So thanks for bringing that up, David. So I'm going to take one last because I'm going to actually bring in Jaco here because it's one, I think, from, that pertains to him. And it's quite a good one. He says, I believe one day, it's from Anonymous, I believe one should be cash flow positive from day one. But when is running cash flow negative? Okay, except when you expect huge capital growth. Your comments on that, Jaco?
Yeah, I actually think the question answers itself because when you have capital appreciation, it could be okay to be cash flow negative. So you could be in a situation where you are putting money in every month, but you are seeing it like a pension fund. In a pension fund, you're also putting in money every month, but eventually one day you're going to get a large amount out. So if you have good capital appreciation, again, I'm going to use the Western Cape. In the Western Cape, you could have negative cash flow, and it could be all right because capital appreciation is really doing well there. I mean, we saw, for example, on the Atlantic seaboard, if you take over the last 20 years, the amount of appreciation that we've seen there, it justifies a negative cash flow. But if you invested in Joburg in the last 10 years where property prices barely increased at all in 10 years' time, if you didn't make positive cash flow on that property, you are losing money. So for a property like that, having positive cash flow is essential. So that would be my 2 cents worth on that question, Neale.
No, great. Thank you for that. I have to be aware of time. We've actually surpassed our time, and we've still got over 50 odd people here, which means that they haven't disappeared and they are enjoying what they're hearing. So, but we have got to the bewitching hour. So what I'm going to ask is each one of the panelists just to give their final wrap, their final thoughts that people can take away and use to their day-to-day usage as a property investor, starting with you, Elize.
Thank you, Neale. So for any investor that's watching this, I want to say, please do planning. Be planning for possible legal things. If you never use that planning, I mean, that's fantastic. You can use the money then later on. But if you want to investigate that and after this, obviously, please contact me. Same with an agent. I think a lot of people don't want to talk about this part of management, and I think it's vital. You can give yourself a competitive edge just by talking about that nobody else wants to talk about. And it's something that's a reality. So please reach out. We are going to drop a link with all my information, and you will share that as well. But be proactive, be prepared. That is my advice for everybody watching this.
Great stuff, and I think wonderful way to end off there. It's Elize Leroux, Attorney, Managing Director of Xpello. Reach out to them, and if you've got issues, certainly to prevent people not paying their rent, but also if they aren't and you need to evict someone, which is an unfortunate incident. Right, Jaco, your final thoughts, please.
Great. So, as I mentioned, one of the most important things that you want to have in place is your structuring. You want to make sure that you build your property portfolio on a strong foundation. And if you are interested in that, We would love to sit with you in a one-on-one consultation where we can actually walk you through your portfolio if you have a portfolio already, help you in setting the correct structures in place, also register those entities and administer those entities for you. So the QR code is on the screen. You are welcome to scan the QR code. There's a 20% discount if you book today as well. Alternatively, I have given you our website address. You can go online at a later stage as well and book your session. Then, Neale, I am very excited about the event that we are having next Thursday in Durban. So if you are in Durban, make sure that you do not miss our annual Property Investors Evening in Umhlanga at the Radisson Blue Hotel. Tickets are starting from only 495 Rand, and it's going to be an absolutely phenomenal event. If you have a tuxedo, you can dust it off for a nice evening dress, because we are dressing up, we are showing up, and we've got some of the best speakers in the country that's going to be there. Neale is going to be there in person. Elize is going to be there in person. Myself is going to be there in person. David is there now at our Cape Town events. So when we're in Cape Town again for one of our events there, you can meet with him there. Myself is going to be there. So make sure that you book for an event near you. We've got property investors evenings all over the country this year. And you can get this also on our on our website. So prosperityenterprises.co.za. You can go on there, you can go to events, and you can actually see all the events that we are hosting. We also have full-day seminars. If you really want to educate yourself, we've got one in KwaZulu-Natal, one in Gauteng, and one in Cape Town in the next couple of months. On the website, you can book for that as well. And then I want to encourage you, like I said, with the education side, educate yourself. That's one of the most important things that you can do. And this is Prosperity Through Property. This is the book that I wrote a couple of years ago. We brought out a second edition recently as well. And this book teaches you everything you need to know about property investment. Also on structuring, we do have a couple of chapters that specifically focus on structuring. So make sure that you get your hands on this copy. We send the book via courier anywhere in the country, so you can book online on prosperityenterprise.co.za and get your hands on a copy of Prosperity Through Property. Thanks, Neale. That's all from my side.
Wonderful. Thank you very much for that, Jaco. Just so that you know, there is a link in the chat box for next Thursday's event in Durban. So if you are in Durban or you want to come to Durban, just click on that link to make your booking. It is a paid event. And as Jaco said, we're all dressing up to the nines. So come and join us. So last but not least, David, your final wrap, please.
I can recommend those events. I've been to a number of them, and they're highly informative. Just lastly, thank you for everyone for being curious. I haven't found a successful person that's not curious and wanting to learn. So well done for attending, and hopefully you've got some nuggets that can take you forward. And treat your property as a business. Jaco said that. And then just remember the 4 main needs of yourself as a landlord. My details are here. Please feel free to use me free of charge. I just love helping landlords. My style is going to be quite frank, because I want you to make more money sustainably at the most efficient manner, and that is my heart. So please feel free to use me whenever you want to. Thank you.
Awesome. Great. Thank you very much, David. Also to Elize and Jaco, just for joining us today, sharing your valuable insights. And I really think your contributions today have been really some real golden nuggets, I think, in it. And I think it's definitely enriched our audience. I've seen that because so many people have just stayed online. So they haven't disappeared, which means that they engage, they want more. So we'll certainly look at doing more of these in the future as well. And I'm certain that you, as the attendee, has walked away with a wealth of knowledge to guide you in your property investment businesses and in your businesses that you run. Just before we finally wrap up, I just want to remind you of our next upcoming events and webinars. As I mentioned, this will not be a webinar next Thursday. I will be in Durban. Well, I could run one in Durban too, but I'll also be presenting at a live investor event next Thursday, starting at 6 o'clock. We've got the link. It's actually in as Jaco shared with us, and we also will be coming to a city near to you. But we are back online for our webinars on Thursday, the 10th of April at 12 o'clock with a very insightful topic, very experienced panel. We've got Lightstone, we got private property, we got, what are the top real estate agencies, and we're going to unpack the property market, the outlook of 2025, the trends, the challenges, the opportunities for investors and industry. And there is a link which is at the bottom of the chat box, or you just go to the rei.co.za website. Once again, thank you to our audience and to our panelists today. And your engagement has certainly made this session more valuable and impactful, and we really appreciate your time and participation. And we hope you walk away with actionable insights, fresh perspectives. And once again, great webinar. Thank you to our panelists for all your input. This is Neale Petersen from REI signing off alongside our expert panelists. Until next Thursday in Durban and week after at our webinar, we wish you success in your property journey. Happy investing and goodbye from all of us. Cheerio, everybody.